After the best day in 2020, since 2020, for the US stocks, came the worst day since 2020 for US stocks. That's the nature of the markets currently. Thanks for tuning into the trade setup right here on BQ Prime. Yes, we are BQ Prime now. Same us, just a different name. The content sharing agreement with Bloomberg stays. We try and get you as much content as we can, but nevertheless, let's focus on trade. Now, the trade is looking slightly iffy today, simply because of the fact that the US markets came off and came off very, very rapidly. The point is the nature of the fall. I mean, just look at what fell in the US markets. Nasdaq was down about 5%. Right? And currently the futures are flattish, but the damage was done yesterday, down about 5%. And the key aspects are looking slightly weak. Now, the reason why I'm saying that we should all be careful. No, let's stick to that plate. It's important one because the lower statistic of the dollar index at about 103.82. That's the problem there that I'm talking about. That the dollar index is still about 103. The 10-year yield is about 3%. Interest rates have moved up and will move up higher if Jeffrey Dennis yesterday is to be believed, or any other publication is to be believed, really, that rates are slated to move up higher from where we are right now. It's not just a one-off increase. There's going to be a series of increases. So the clouds are there. And for now, I don't quite think that we are done with the volatility as yet. If somebody has been listening and together with us on the trade setup, I've said this enough number of times that let's try and make it interactive as well. If you have some thoughts or questions, just put it on the YouTube feed or the Twitter feed and we'll try and even talk about it. But for all the last 1 month, we've been talking about how stay away from leverage longs. It's better to not try and be overly bullish. I still don't think that this could be the buy the dip the one, just because there's a lot of uncertainty, and just because all that I've heard and all that I've listened to other people say, I think there's still some time. The SGX Nifty kind of gives its hand away as well in the session today, right? Because we will have a start which is in the red now at 16,412. We are well and truly below those support levels of 16,800, which we cracked below yesterday. Are we en route to the recent lows of 15,800? Who knows really? If somebody tells you yes or no, and there is no science to it, it's just the belief that right now, because the markets are doing what they are, we're likely to correct more. So let's wait and watch how this shapes up. Now, a couple of factors that I want to highlight. First, what happened in trade yesterday. The markets were up for a better part of the trade and then came off, and which is why you had stocks which did well to ABB India post the numbers up about 10%. Adani Green can do what it does. Varak Engineering bounced back. BDL did really well. At the same time, you had stocks which lost out quite a bit. All three, Lakshmi Organics, Privi, as well as Deepak Nitrite, showed chinks in the chemical space. Angel One continues to grind lower. Godrej Properties had some losses. So mixed bag of sorts, but the advanced decline ratio marginally in favor of the decliners. Nothing great, but on a flat day, you had bad market breadth and you had FIs selling in trade yesterday as well, to the tune of about 2,000 odd crores, which was their FI sell number, versus DI's buying 2,229 crores. So what's the trade setup there for Lucklie? I think Nifty holding the lower top formation on intraday charts indicates that there's further correction from the current levels. And I think we already start off at the corrected level. So therefore, I'm not suggesting on intraday level will we go down or no. Actually, I don't even have that expertise. So excuse me for that. But just that the scene doesn't appear to be a level from where we necessarily buy the dips just as yet. And from being a buy the dips kind of a space, I think when you look at pockets, it's now become a bit of a sell the rallies that come into real estate or select infrastructure names. I mean, in a rising interest rate scenario, no matter how strong the sales are, if the rates are going to go up very, very quickly, then the sentiment, if not the actual big impact that comes on housing loans, might be there. Now, I might get proven wrong here, because the numbers thus far from all real estate companies are looking rock solid. Is the last few months rally in the near-term price? That's the question. Lastly, just from the looks of things, upstream oil and upstream stocks continue to be the ones to probably bet on. Now, this is not a recommendation. I'm not equipped to do a recommendation. I'm not allowed to do a recommendation. I'm just urging all of you, if you haven't, it might be worth your while to hear the conversation with Pinakin Parikh of JP Morgan that we did on Talking Point yesterday. It'll be there on all our social media handles and our website as well. But just if you just go and merely YouTube Talking Point Bloomberg Quint or Talking Point BQ Prime. The erstwhile name is Bloomberg Quint, the current name is BQ Prime. But just Google Talking Point and listen to yesterday's conversation with JP Morgan's Pinakin Parikh. It'll tell you a thing or two about what possibly could happen to some of these upstream stocks and energy stocks in the days to come. Could be interesting to you. May listen to that. Of course, uh, things may change very, very rapidly. So that's the standard disclaimer on any conversation that happens on Bloomberg Quint from the guest side as well, or BQ Prime from the guest side as well. But keep that at the back of your mind. Results today, busy day. Not as much as some of the previous days, but yeah, Tata Power, the big boy, Reliance, Federal Bank, Can Bank, Jesco. So should be an interesting day of trade. What about stocks to monitor though? That's the key thing. And I think a few result reactions is the stuff that you got to watch out for. Now, TVS Motors Q4 numbers, the margins were better than estimates, so that's the key point to monitor. Revenues at 5530 crores. The estimates were about 5645 crores. EBITDA margin at 10%. The Bloomberg estimate 10.07%. The Bloomberg estimates was about 9.8%. So actually largely in line, but slightly better. Net profit at 274 crores. The Bloomberg estimate was 262 crores. Now the key point is, viewers, there was a lot of talk or expectation that, oh, could TVS announce some splitting of um, the EV business? That hasn't come about. So that is a bit of a pickle for people who are constructive on TVS. But I read the brokerage notes this morning. I haven't given them as yet, but Jeffries, for example, has maintained a buy with the target price being raised to 800 rupees on TVS. Yeah, we can take this plate off. But so Jeffries, buy, the target price has been raised to 800 rupees. They are saying that TVS is gaining market share across scooters, premium bikes, and exports. And CLSA has an outperformed target price raised to 724. They are saying that because it's maintained its gross margin and EBITDA margin on a QOQ basis, despite rising raw material cost inflation, makes them confident. And also that the company is confident that it can achieve double-digit growth in volume in FY23 and expand its EV volume through new launches. So could be interesting TVS Motors, though I think on a day like this, you don't want to really be a braveheart and try and venture into something that has not shown an exceptional beat. So that's with regards to TVS. Voltas was lower than estimates, really. Revenues at 2666 crores. The estimates were 2703. EBITDA margins were 9.79%. The Bloomberg estimate was 10.9%. Net profit at 182. The estimates were 230 crores. On all counts, it was a miss, and I reckon that it'll probably show up in the way the stock reacts as well in the session today. Not really the best of performances from Voltas, and that could show really on the stock. So, yep, let's wait and watch how this one does in the session today. Then CET, I thought the numbers looked much better than what was estimated. It was not a good quarter, but since stocks react a lot more to what the expectations were versus how it's been delivered, I'm bringing these expectations to you. The revenues were 2591, the estimates were 2438, EBITDA margin at 7.23, the estimates were 5.72. That's the key point, that the estimates were 5.72%. Remember, for the corresponding quarter, their margins were 11.39. So margins have come off rapidly, but they've not halved. They've done better. And even on the profit side, the profits have really shrunk. So the net profit number was 152 crores YOY. It's now coming at 25 crores, but it's better than the loss of 9.46 crores that was estimated. So a really bad quarter. CR is just done slightly better than what was estimated. DCM Shriram, I thought the numbers rock solid really. Revenues up 21%, EBITDA margin 21.6 versus 15.87%, net profit up 73.5%. So on that count too, they did really well. So on all counts, I thought DCM Shriram as a stock or as a company did really, really well for itself. So keep in mind. I mean, keep in mind, caustic soda, PVC resins, margins, all of these may pick and grind down, and therefore, DCM Shriram, it may not be the stock that you go out and buy necessarily this morning simply because DCM Shriram has had a bit of a rally. So you have to keep that at the back of your mind. Blue Star, I thought under the circumstances did reasonably okay because they maintained margins largely and showed reasonable price volume growth, right? Revenues up 39%, net profit though up just about 12%. So that's the issue. So also the key is that Blue Star is fairly expensive, so you got to keep that at the back of your mind. A couple of other counters include an Indus Towers and a Happiest Minds, wherein in the stars the EBITDA margins were at 57.19 versus 53.47. Happiest Minds revenues were up 6%, PAT was up 6.52%. So I think they did reasonably okay. Didn't quite show too much of pressure on the EBITDA front as well. So I think all of that was okay. I think other paper results were pretty good too. So that's the other one that you got to um, keep in mind, which did reasonably okay. Now, viewers, just remember, if you are not parked in the e-commerce companies, you should be happy. I mean, yes, Nykaa has done reasonably okay after the catastrophic fall that it had, but just looking at the way Shopify, Etsy, etc., all fell, there might be a bit of a corresponding effect today in India in some of those online shopping or online stocks per se. So don't be surprised and ask why Nasdaq has fallen, and it was led by those shopping stocks. So you might have a bit of an impact, above effect out there as well. So keep that in mind. Uh, it's not that the futures have really bounced back in the US. So we may have a down day, which might stay lower. So that's the other point to keep in mind. Is it a good day to go out and fish? Not on the leverage side. So please keep that in mind. Don't go out and buy futures. Uh, think of everybody who carried home some long positions yesterday and how badly they will get impacted today. Purely from a trading perspective, since trades are usually short term in nature. So that's the nature of the beast for now. Stay safe. Don't try and be a braveheart. One number of people have said that this might be a year wherein you need to preserve capital as opposed to try and build on a lot of wealth. So maybe that should be a strategy that people should think about. Unless you pull down on the screen and consider yourself a real expert, don't try and be a braveheart. Be prudent to just kind of be light. Go out and enjoy. I mean, what's the point of trying to compulsorily trade and make losses? Be safe. And if you're stepping out, of course, stay safe as well. Thanks so much for tuning in today. Have a safe day.